Yeah. Well, one thing which is ironic about the American economy is that it's still relatively booming right now. And one of the reasons is, and this is something which is a fallacy that dominates conventional thinking in general, the conventional belief is that the government shouldn't run a deficit because that's going to be a burden on future generations. The government has to borrow money to spend, etc., and all this stuff must be hampering economic growth. In fact, if you read an economics textbook, and I recommend that about as much as jumping out of a fourth story building and landing on your head in terms of what it does for your intellect. But if you read these textbooks, what they'll tell you is that the government spends more than it takes back in taxation, then it has to borrow money from the private sector, which they call loanable funds. That leaves less money available for the private sector to invest. So a government deficit causes the rate of investment to slow down and the economy slows down. Now, when you do the accounting, and that's what my Ravel software is designed to enable, you can see that the government spending more than it takes back in taxation doesn't take loanable funds out of the private sector. It creates loanable funds for the private sector. When you do the accounting, it is incredibly obvious that the government spending increases the amount of money in the private sector. So if anything, the private sector, the non-banking sector, sorry, if anything, the amount of money that the non-banking private sector has to be engaged in commerce and to lend to others in peer-to-peer lending increases because of a deficit. Now, we're seeing signs of that right now because, again, one of the many promises that Trump has broken, and about the only promise I'm happy that he's broken, is that he promised to reduce the government deficit. If he had done that, there would be less money being created for the American economy, and the American economy would be slowing down in the same sense we're seeing happening in England and Europe, which are unfortunately taking more seriously this nonsense idea that the government should not run deficits. So the government creates money when it runs a deficit. That's happening in America right now because that's, as I said, that's a promise that Trump has broken. And that's what's one of the things helping the American economy to boom. So you've got a boost to the economy coming out of that. Even interest payments on bonds are money creation by the government, which increases the amount of money in the private sector. And when it goes into financial corporations, the interest at the moment is running at the level of about 5% of GDP. Because American debt's about 100% of GDP, the interest rate on bonds is about 5%. So in that case, the American government is creating 5% of GDP worth of money every year for the financial sector. Now, when financial sector entities receive money, they are required, apart from paying bonuses to themselves but what he's done in terms of the damage to the production system of the planet, that will take time to turn up in the data because the damage hasn't yet hit the production facilities of both America and the rest of the world because we still have stocks of the things which are no longer coming through the Strait of Hormuz, which are now being depleted. Now, it could be anything between 2 weeks to 2 months before that depletion eliminates existing stocks, and there is now a hole in the supply chain because of the closure of the Strait of Hormuz. Nothing will come out of there for a 2-month period. This means the physical economy is going to start suffering, and this is what I think is the biggest danger that we face this particular calendar year, that the financial commitments that the corporations have and that individuals have are based on an expectation that they can continue producing goods and services and selling them, and therefore having profits to repay debt. They can have profits to service debt. The system relies upon being able to sell goods and services to make a profit for the capitalists to pay wages for the workers, enabling the firms to pay their financial commitments that they've borrowed for working capital and investment, and for the workers to pay their mortgages. Now, if you suddenly lose when the Strait of Hormuz closure affects the physical productive system of the rest of the planet, people are going to lose their jobs. Firms are not going to be able to produce output. They won't be able to meet their financial commitments. And when they can't, we're going to have a financial crisis. And that will be a case where the stock market, as George Soros has said so many times, reacts too slowly to news and then overreacts. So I expect a stock market crash coming out of this ridiculous war sometime in the last 6 months of the year. That's when we're going to see the production capabilities collapse. That's when it's going to be impossible to service existing debt. There are going to be how people who lose their houses who are workers. There'll be corporations who can't meet their financial commitments because they can't make the goods and services in the first place. So we'll see a financial crisis later this year. Unnecessary, totally unjustified, all caused by the war itself. Well, if that's whetted your appetite to have a realistic approach to economics, then join me and learn realistic economics through stevekeen.com. If you apply and get fully accepted, and then you can use my Ravel software that you've seen me using in this video. You can talk to me and ask me questions. It's a free book bundle that's available just this week. To apply, go to stevekeen.com or scan the QR code.